Welcome to the NWR Aussie Resources Conference. My name's Kerry Stevenson. Next up, we have Q Energy. The ASX code is CUE. Nice and easy to remember. Now, they are oil and gas in production in Indonesia, Australia, and New Zealand. And right now, oil and gas is in the news because we are facing an energy crisis. So it's wonderful to have Matthew Boyall. He's the Chief Executive Officer, helping ensure the energy keeps running. Matthew, over to you to give us an update on Q Energy. Very exciting times.
Yeah, great. Thanks for the introduction, Kerry. Good morning, ladies and gentlemen. Happy to be here to present Q Energy to you. We've had a great year in FY22, and the expectation is that will continue in FY23. As I take you through the presentation, happy to show you how this is going to be achieved, and the fairly simple story. We produce oil and gas. Oil and gas is at good high prices at the moment. We've grown organically through development and production in Indonesia and through acquisition during the year. So this will be obviously published, and I draw your attention to the disclaimer and encourage you to read this at your leisure when you look through this presentation again. As mentioned in the introduction, Q Energy is an oil and gas production company. Fundamentally, we have 4 geographical areas we produce oil and gas from and 7 projects. In FY 2022, which we just finished, I'll take you through our results shortly, but we had significant growth, doubling of revenue, very large increase in production through drilling in Indonesia and acquiring an onshore asset in Australia. We generate very strong cash, revenue of $44 million, EBITDAX of 29, and we have very high activity levels going into FY 2023, where we'll be drilling at least 10 wells in Indonesia and probably 2 wells in Australia. All production wells, which have a high chance of producing oil and gas and revenue fairly shortly after. Our ASX ticker is CUE, as mentioned, and we have a market capitalization of about $45 to $50 million, cash on hand of 23 as of June 30, which is if you look through there, is a very low multiple to EBITDAX of 1.6. And I think as we'll go through, we'll show you the growth we expect in our company, and hopefully some appreciation of the market capitalization through the year. In FY 2022, we reported $44 million of revenue. That's up almost 100% on the year before. Profit of 16 million, it's up over 200%. And EBITDAX, which is a very good measure in our industry, of cash flow, up 180%. The root cause of this, if you want to put it, is the production up 60% year on year. We now produce over 600,000 barrels of oil equivalent per year. We have very low cash costs for our production, and the average gross profit margin we made on a barrel of oil last year was $102.
Those are very impressive numbers, Matthew. Sorry, I'm sitting here just going, wow.
Yeah, so they are, and we did benefit, and we are still benefiting from high oil and gas prices. Not expected to change dramatically over the short term, although we'll see some ebbs and flows. It's a combination of, we'll see growth in our projects, existing projects, and acquisition of a new project during the year. So these are our production areas. Diversified, we've got production from 4 geographical areas. In New Zealand, produce oil offshore in the Taranaki Basin from the Maari field. These are all non-operated, so we don't run these. We are joint venture partners in all our operations. In Maari, we have 5% equity. In Central Australia there, Mereenie, Valley and Dingo are assets which we acquired in October 2021. These are gas producing assets, existing assets. We own 7.5% to 15% of those, and they're operated by Central Petroleum, another Australian ASX listed company. That gas gets sold into both the Northern Territory and the East Coast gas markets. And as we saw not many months ago in the newspapers, there's premium pricing for gas at some stages during the year here. We've been in Indonesia for a long time, and we now have 2 producing projects in Indonesia. The Sampang PSC, which is a production sharing contract, which is how the government permit system works in Indonesia. We have 15% of offshore gas production. That was the image on the front of this presentation showing the wellhead platform. The gas goes straight to power a power plant, which then provides electricity to East Java. So long-term fixed price contracts there. And our growth asset is the Mahato PSC, which is in central Sumatra. Q has 12.5% interest, and that's onshore oil production, contributed significantly to the growth in our revenue this year. And as we'll see, is expected to contribute significantly to growth in FY23. We have head office in Melbourne, which is where I'm talking from now, and we have an office in Jakarta, which helps to manage our Indonesian assets and opportunities. We had $44.4 million of revenue in FY 2022, and as you can see from that chart, that's double FY 21 and almost double for the preceding 5 years. The bulk of the revenue came from Indonesia through our 2 projects there. In Australia, we only recorded 3/4 of revenue for the year due to the acquisition being in October, and New Zealand is a full 4 quarters from our Maari project. We expect this revenue to grow into FY23 from significantly Australia and Indonesia, growth in Indonesia from drilling and production expansion, and growth of revenue in Australia from 4 quarters of revenue being recorded in FY23, and there's development and growth of production assets there as well. So the indicator there is that we'd expect this revenue of $44 million to increase into the next year. Driving this is the production increases I expect into FY23. In FY22, we produced over 600,000 barrels of oil equivalent. 65% of that was gas, and 35% of that was oil and condensate, which is a light oil. Our production came 57% from Indonesia, 30% from Australia, which contributed 3/4 only, and 13% from New Zealand. Now, again, significant jump from FY 2021, showing the growth trajectory we were on, and we expect FY 23 to be higher again than FY 22. Now, great time to be producing oil and gas and to be expanding production. And this is what we do. So this is Indonesia, the Mahato PSC, where we see production wells in the foreground there. They're producing oil, and in the background, we're still drilling. And this is our growth area for them for the year. So the Mahato PSC is a production sharing contract, which is the permit system in Indonesia. And it's in the central Sumatra Basin, onshore Indonesia. Now, the central Sumatra Basin contains the largest oil production, and historically the largest oil production in Indonesia. The Minas and Duri fields contain billions of barrels recoverable for the last 40 and 50 and 60 years. Our field is near there. We're only 10 or 15 kilometres away. It's a very oil-rich area.
Matthew, just a quick question. It says on there injector wells. What does that mean?
Yes, so an injector well is where we both dispose of water that comes up with the oil and use the water to help more recovery from oil. So you put the water back in the ground and it helps recover more oil.
Thank you.
It's a part of the development program of most oil fields that have a water drive system. So this field in FY22 contributed $15 million of revenue to Q and almost $8 million of net profit. That's up from about $2 million in 2021. And we can see from the image there that describes the growth. So what we see on the chart there is the permit outline in blue, which is the area we have rights to explore for. In the green labelled Petabahan is a field that's not Q's, but is multi-hundred million barrels of oil that's been recovered. And within the blue boundary is our field, which we call a PB field. Each of the green dots are wells that have been drilled to date, and there's 10 of those, and they're producing in combined about 5,500 barrels of oil a day per field. The dots in pink and red are the wells that will be drilled over the next 12 months. So we received approval from the government, who are the authority to regulate the well drilling, to drill up to 20 wells in the field, and 10 have been completed to date, and we've got 10 more to go. These wells get drilled at approximately 1 a month. It's very quick to drill these wells, and we expect them to come on pretty quickly after they're drilled.
Matthew, Mahato, you have 12.5% of that Mahato field. Who owns the rest of it?
So the rest of it is owned by a private Indonesian company who also operates it. So they're well resourced, well connected, able to get the work done, and that's why we can see these wells being drilled so efficiently at 1 per month. We have as I said, we have an office in Jakarta which keeps track of our position and collaborates with our partners in both this field and the Sampang field. It's very important to be understanding your position when you're a non-operator, to be in the country and discussing daily what's happening with your operators. So this is a large resource, and we've had a reserve report completed that says estimates it's 93 million barrels of oil in place, and that we can recover about 21 million of those at 100% at a gross level. So that's about a 21% recovery of all the oil in the ground is our estimate. There is evidence of greater recovery up until 30 and 40% over these fields in the area. Typically last 30 and 40 years as the oil keeps flowing. And this is the image of the growth we forecast or expect to happen at Mahato during this year. So the blue bars represent the actual production to July 2022. And the grey is indicative of the wells we expect to be drilling 1 a month, 10 of them for the next year. So the first 2 are completed in June and July and produced 1,000 barrels a day and then 800 barrels a day. And under that rate, with 10 more wells to be drilled over the next year, we expect that production would double if we continue with those rates. The wells are pretty easy to drill. They're 5,500 to 7,000 feet depth. And from the time you put the drill into the ground to the time you've connecting the well to the production system and selling oil is about a month. So therefore we expect this to impact our revenue dramatically. At the current oil prices, this oil gets pretty close to Brent price. So we're up around the mid-90s still, and we expect the same sort of levels of oil price going forward. So we'll have a direct comparison of production to revenue increases coming from this field we expect. Also in Indonesia is an image of our Sampang PSC, which is an offshore field with an onshore gas processing plant. This is an image of a gas processing plant that feeds gas from the offshore fields, processes it and delivers it directly into a power plant which powers East Java. It's called the Sampang PSC. This has been operating for many years now. It's dependable gas production. So we have a number of wells offshore that produce gas into these wellhead platforms. Very little intervention or OPEX required. Delivers it through pipelines to the onshore processing facility and then to power plants. So the Sampang PSC from 2 fields produced $12 million revenue to Q in FY 2022. These are fixed priced gas contracts, very predictable. The growth in this field is expected to come from Paus Biru, which is a gas discovery we made about 3 years ago. It's got an approved plan of development, which is the government's approval of how you're going to develop this field. And it was done in 2021. And since then, we've been just discussing commercial arrangements and approvals with the government, and we're coming close to an end there and would expect an FID on that project before the end of the year. It's a fairly simple operation. Again, we will drill one well into the Paus-Biru gas field, put a wellhead platform on it, which is the schematic to the left, build a pipeline that connects that wellhead platform to the existing infrastructure in the market. So assuming an FID is achieved before the end of the year, we'd expect to be producing gas by 2025 at rates of about 20 to 25 million cubic feet a day, which is about the same as we're producing now. Q's newest assets are in the Amadeus Basin in Central Australia, just around Alice Springs, Uluru area. This is an image of current drilling we're undertaking, Palm Valley 12 well. So it shows you the drill rig there and the surrounding areas. Very, very tough terrain, and remote, but it's given us some good results over the years. So we acquired interest in Mereenie, Palm Valley and Dingo gas fields in October 21 from Central Petroleum. In the 3 quarters since October, they provided $8.2 million revenue to Q. And we sell gas from these fields both on long-term contracts and short-term sales. As we saw in the newspapers not many months ago, some of these short-term sales were getting $40 and $50 a gigajoule. We also sell oil and condensate from the fields at market prices. The fields are there in Central Australia with the green dot, connected by the pipelines through to both Alice Springs and through the Northern Gas Pipeline into the East Coast gas markets, which allows us to get gas to the high demand areas that we're hearing so much about now. And like the other projects that we've discussed, there are production enhancement opportunities in these fields, which we think will contribute to growth in the short term. And we're currently drilling a well at Palm Valley, which was the picture of the well, and I can go more into that in a minute. We're also looking at undertaking 2 more development wells in the Mereenie field in the next financial year, and 6 well recompletions, which means we go back into the wells and try and improve the recovery from down the hole. At the moment, we are drilling a well in Palm Valley 12, the image we showed. The schematic on the side there shows what the well looks like. We've been down to targeting an exploration target deep, which is the brown in the image. It was very challenging drilling. We didn't get as far as we wanted, so we pulled back to another reservoir, which was called the Pakuta P2, P3. And we did a lateral, which is a horizontal well outside of the main well. It didn't get the results we wanted. We hit water, not gas. And so at the moment we have drilling another horizontal section of the well in the very top section there called the Pakuta P1, which is coloured orange. Now that is the producing reservoir in the Palm Valley field. So we have other wells that produce from that reservoir. And we're just getting into it now, and pretty soon we should understand whether there's gas that can be producible from this well in that reservoir too. Again, it's connected to the market, or it's connected to the market, and if it's producible, will be easily marketed through existing infrastructure.
1 minute to go.
The other field we have is Maari, which is New Zealand, and produces about 3,500 barrels of oil a day, and has a few wells which will be repaired very soon to get that production back up. I encourage you to look at our sustainability section on our website, our climate change policy, and report under TCFD guidelines. So Q Energy's investments, we have a diversified production portfolio, all production, 4 geographic areas, 7 projects, all giving revenue every month. Our results in FY22 were very strong, $44 million revenue, increase in production by almost 60%, and a $16 million profit. We deliver our products into high demand markets, both the oil markets and Indonesian and Australian gas markets on the East Coast. We expect these markets to continue to be high demand and oil price expected to continue to be elevated. And finally, we have near-term growth. I can plot a path in FY23 to our growth in production and revenue, mainly from the Mahato drilling, 10 wells, 1 per month, but also from the Mereenie and Amadeus basin assets, where we will record 4 quarters of revenue, as well as have development projects and drilling throughout next year.
Well,
thanks for attention. Thanks, Kerry.
That was a very impressive set of numbers there, and obviously investors love numbers. I've got a lot of questions for you, Matthew, so sit back, get prepared.
Go for it.
First of all, from Stephen, it appears Q is starting to generate recurring revenue, yeah, lots, from 3 geographical locations. If his assumption stands that once all capital commitments are provided for, is Q thinking of how to reward shareholders? If so, he would appreciate your views and thoughts on the most appropriate way, i.e. capital return, dividend, or share buyback.
Thanks for that question, Stephen. We always think about value to our shareholders, and as you rightly point out, we are in a very cash generative position and expect that to continue. The one thing I need to point out is that we do still have a lot of development projects into next year. So we are spending a lot of money still. So we do continue to look at capital management, both from FID projects that are coming, wells that are drilling, and how we can return value to shareholders. We haven't announced, and the board hasn't announced any moves that way yet, but we definitely keep it in mind, and we will be, I guess, very highly cash generative, especially after we get through our phases of drilling and development that we've outlined here.
Next question. There appears to be some consolidation going on in the oil and gas sector. Are you looking at opportunities in this area as either an acquirer or to consolidate with another entity?
We always look at opportunities to increase value in the company. This year, we did it via drilling in Indonesia and acquiring assets in Central Australia. Look, we just look at all sorts of opportunities for increased value. I can't really comment on how we'd be looking at obviously the questions around mergers and acquisitions. I can't really comment too much, but rest assured, we do look to increase our scope and value to shareholders at all times.
Next question is, what's been the key to Q ramping up production in the past 12 months? Because those were a very impressive set of numbers. So what's been the key to that ramp up?
Yeah, the key to the ramp up is primarily the drilling at Mahato, which is also going to continue, a full year set of results there. And if we expect to double production at a similar oil prices, we can expect revenue to follow. Also, the acquisition of the Central Australian onshore assets, Mereenie, Valley and Dingo, where we've had 3 quarters of production revenue rolled into our financials this year. Again, expect that to continue and increase as we at least roll in 4 quarters of production. So what we're seeing in FY 2022 is a sustainable set of numbers, which is fundamentally different from the previous 5 years. We're on a path that is now that's the new norm for Q with the growth of our assets that's planned.
Dev is asking if you've looked for helium in your Central Australian tenements.
So we know our partners, Central Petroleum, actively promote their helium. Look, we look at all sorts of products. It's the same sort of product as we get from our gas wells. Q is not a party to the permits that our partners are promoting helium in. So from our current production, we focus on producing gas. But of course, it's, while gas and oil are our core business, these other products exist in the ground in the same way we look at gas. So we keep everything in mind. We haven't gone down the path of any of those individual other products yet.
A final question, unless somebody comes in and gives me another one. How many wells are you planning to drill in the next 12 months? And how do you see that panning out?
So in Mahato, which is onshore Central Sumatra, we're drilling approximately a well a month over the next 12 months. And there's 10 wells to go in that campaign. As I said, the first 2 have been drilled and came out with 1,000 barrels a day and 800 barrels a day. In addition to that, there's 2 development wells that are planned for FY23 in the Mereenie field, so targeting higher gas production in Central Australia. And we've got workovers planned in Mereenie as well, which is simpler processes to go back into wells and try and improve the recovery. So approximately 12 wells, 12 new development wells that we'd expect to get production from. And of course, we're currently drilling Palm Valley 12. So that's include that one, and you've got 13.
A very busy time for Q Energy. Matthew, thank you so much for joining us at the NWR Aussie Resources Conference, and all the best for all that drilling and lots of revenue coming in. Well done. Congratulations.
Great. Thanks, Kerry. Thanks, everyone.